Hello, everyone. Happy 2026. Today, we're going to talk about what's changing in the world of finance. And we're going to hit everything from Social Security to Medicare to your retirement plans and a little more. So I can't wait to dive right in. Let me grab Walt and we'll get started.
A new year is here. Happy 2026, everybody. Walter Stroholt back with you alongside, of course, Steve Smith, Powerhouse Financial Advisors, a certified financial planner. And we've got a great episode on the way today. A pretty simple one, Steve. Simple, I guess, in a way, in that, hey, we're just looking ahead. What to expect in 2026, what's changing, all of that good stuff. If you want to jump into that, folks, just skip ahead about 30 seconds or so. But I have to say hello and Happy New Year to you first, Steve, and hope life is treating you well and hope the holidays were good to you.
I had a great time. We could have used a little more snow on the mountain out there, but other than that, it was a great time with family and my daughter's home from university. So what more could a dad want than having the family together?
That's awesome. Yeah, it has been pretty much a non-existent winter for us and where we live, hasn't it? It's been a little crazy. I was in shorts and a T-shirt. I mean, I'm always in shorts and a T-shirt for the most part, but I was in shorts and a T-shirt on Christmas Day, which just didn't feel right.
Right, I hear you. And we live like in the mountains. We did get a little dusting on Christmas Day.
Okay.
But it was gone by the afternoon. So it was kind of here today, gone tomorrow type of
Well,
thing.
I would have taken that versus the 72-degree weather that we had or whatever it was. So a little dusting sounds like heaven to me at this point.
Right.
We're getting pretty desperate on this end of things. Well, fantastic. Glad things have gone well. Let's jump into talking about 2026 and what to expect this year. We're going to talk about cost of living adjustments. We're going to talk about Medicare premium changes that are on the horizon, additional tax deductions for seniors, and some changes to catch-up contributions, and whatever else Steve wants to throw onto the pile as well. But those will be at least a few of the updates that you're going to get today. Steve, let's talk about the cost of living adjustment. This is going to be something that really impacts folks that maybe are already retired, I suppose, right?
Sure. I mean, we all get impacted by it, and hopefully the employers are also going by this, so we get a little raise for not making less than last year. But in the retirement conversation, you're right. Social Security, especially for those that it's an active part of their retirement, which is most, we are getting a little bit of a raise, so that's a yay, for them. It's 2.8%. So if you've been retired for a little while, you're going, I don't know if that's as good as last year, and you're right, it isn't. Last few years, it's been a little bit higher. The good news is inflation itself has been lower, so those balance out. But the good part is you are going to get a little bit of bump in 2026. So who doesn't like a raise, right, Walt?
Yeah, just may not feel like as big of a raise as previous years, I suppose.
Sure.
Okay.
Yeah. One of the things we'll probably get into in a little bit, but as if you've gotten a Social Security check, you know that Medicare comes out on that check, and we have not quite as good a news on that, isn't it, Walt?
Yeah, let's move on to Medicare premium changes. This has to do with kind of the standard monthly premiums. I know Medicare Part B is one that's going to be impacted by this, and it's a decent jump.
It is. For those that have the Part B, which is everybody, it's going to go up to $202.90, which is about $18, a little less, $17.90 up. Which, if you're calculating on the short math, it's itching close to 10%. That's a ridiculous jump, but I didn't set the prices. Sorry, everybody. Because last year was $185, in 2025. And for those on a fixed income, especially if it's a little tight, that can hurt.
Yeah, that's no fun when you then say, okay, so we got a cost of living adjustment of 2.8%, yet a 10% jump in these premiums. Not that those two things dollar for dollar offset or are outpaced, but still just looking at the percentages, it doesn't feel as nice. I thought this was kind of interesting. I saw somewhere that this was the second largest dollar jump, not percentage jump, but dollar jump in the program's history.
Yeah, it just goes to healthcare being a little bit out of control.
Yeah, we've kind of always known that, right, Steve, that healthcare inflation, the healthcare expenses rising has outpaced regular inflation for many years. And it sounds like that's not slowing down just based on this anecdotal evidence.
it'd be a little dated, but I think we did a little blip in one of our podcasts. I don't know if it was the whole thing, but we did a little blip on that of kind of how healthcare has been rising and what it's going to cost in retirement. So maybe we could footnote that.
Yeah, we'll go find that episode and link to it in the description of today's show if you want to check that out, folks.
Yep.
We're talking about updates in 2026, what to watch out for financially, and kind of your money matters that are important this year. We're also going to look at additional tax deductions for seniors. Now, this is kind of looking back to the One Big Beautiful Bill Act here, right?
Yes, One Big Beautiful Bill. This one is going to help offset some of that hit that you're going to get on the Medicare side, because you're going to have a nice deduction. You're going to get an additional tax deduction for those that are 65 and above, right? So that Medicare age of $6,000 if you're a single, and if you're married, $12,000. Now, it isn't a credit. It's not dollar for dollar, but it is going to, depending on the tax brackets you're in, it is going to help bring that income down, which is going to result in some tax savings. So that part is going to be good. And it's not just for 1 year. It's now through 2028. So that we can enjoy that for a little bit. Maybe they'll get the healthcare under control by then, but who knows? No promises there. But we also need to say that the deduction does phase out for the taxpayers that have a modified adjusted gross income, or it's just a little bit different than adjusted. I'm sure you see on those tax returns. Talk to your tax professional if you need to know how to calculate that. But if you're over 75,000 as an individual, or 150,000 as a joint of what you made, that would be in this year, 2026. If you made over that, then it's probably not. You're not going to be able to take that deduction. But for those that are on a little tighter budget, that are under that, that'll help with that Medicare jump.
When you look at everything we've talked about so far combined for seniors, it does at least seem like, all right, the premium increase was a little painful, the COLA not as much as we were hoping, but hopefully this tax deduction for those who qualify for it helps offset some of that pain that maybe they've experienced. So maybe still coming out a little bit ahead this year, I think, if all those numbers work out appropriately, it sounds like.
Yeah, in traditional government style, they made it the most confusing possible and the most out of control possible. So
right.
Good job.
Yeah. Pretty amazing how we get to the number, but it does sound like through all of that, maybe some positive news embedded in there. Now, for those that have a little bit of leftover money or are approaching retirement, a lot of what we've talked about so far, mostly affecting people who are already retired. But for those who are approaching that date, they got some good news about additional capabilities to save more and apply catch-up contributions in 2026. Can you run us through kind of some of the changes and opportunities that are here?
Sure, and this happens frequently, but we got a little bit of a raise. And if you have a 401k, 403b, 457 plan, it's going to go up to $24,500 for any age. Even if you aren't over 50, it's going to go up this year, which is wonderful for those that are under 50. But those who are over 50 or at 50, if you happen to be me, then you can contribute an additional $8,000. So that's very exciting. If you do the short math on that, that's like $32,500. But not everybody qualifies for this. There's actually, for 60 and above, I wouldn't know what that feels like yet, but I'm sure some of you out there do. 60, 61, and 62, and 63. So that's 4 years out of your life. You can do a super catch-up, and that's going up to $11,250. That's big. You add that to the base as well, the 24.5, and it gives you a grand total of $35,750.
If someone's capable of saving that in those final couple of years, we're talking about adding over $100,000 over the course of just those 4 years to your retirement accounts. So that is a good shot in the arm for those accounts at the end of your working career. That's not a bad deal.
And a lot of people that I work with, sometimes that is, or some version of that at least, is possible, because a lot of times the kids are out of the house, and maybe they're in their highest. A lot of times in your 50s, can be in early 60s, depending on the career path that you're on, can be some of the higher income you're earning years. So between lower costs from raising children and higher pay, a lot of times this is a possibility to take advantage of at least some, if not all of that.
Yeah, that's excellent. Well, Steve, any other things you're keeping your eye on in 2026? We don't know if there's going to be a pandemic, a market crash, a crazy historic up run in the market this year. We don't know if we're going to get Secure Act 9.7 or One Big Beautiful Bill version 2.9 or whatever the case may be. But anything that's at least that you're kind of keeping your eye out for, or anything on your radar this year?
Definitely. So I'm really excited about this year just because of the theme. Now, when I say that, I have to ultimately say there's going to be some bumps along the way, because there always is. It's never up in a straight line. And if it is, that's when you get real worried, right? So there's going to be some bumps along the way, but I'm very encouraged. Economy's up. And, we've got a lot of really powerful themes. You've got your AI themes, your robotics, your autonomous car themes, all of these things. Some of them are big stories, but it actually affects, the small business in surprising ways of cutting costs. So costs turn into profits. And in the investment world, that may be not so good for the employment numbers. That may it's up, ticking up already, but is for the profitability for those of us that are investing. What this show is about, investments, I see a little tailwind at our back. But just remember, I said there's bumps along the way, because just like in 2025, big announcement of tariffs can create fear, and it can draw that down pretty significantly until the fear subsides and we get back into a normal pattern again.
Yeah, we'll see what additional themes will pop up this year for sure. Well, there you have it, folks. Some of the things to be on the lookout for in 2026, whether it be Social Security, Medicare, taxes, savings limits. Sometimes these small changes can have big impacts on your retirement future, whether you ignore them in some cases or take advantage of them in other cases. So make sure that you are making the right moves. If you are planning for retirement, planning for your financial future, and trying to think of the best ways to set yourself up successfully, especially if you're an employee of a publicly traded utility, talk to Steve, talk to the team, and power up your retirement. You can get a review of your portfolio, an analysis of that plan, and kind of see where you stand right now, where you need to go into the future. Best place to start is to order the retirement toolkit that Steve has set up for you as well. You can get that for free by clicking the link in the description of today's show. It's all at powerupyour401k.com. Again, linked in the description of today's show. If you have questions about your financial future, about your retirement plans, and you need answers, Steve and his team, that's the place to turn to and ask those questions that are on your mind. Steve, thanks so much for your help, and Happy New Year once again. We'll see you again next week.
Yes, Happy New Year, everyone. We'll talk soon.
This podcast is provided by Powerhouse Financial Advisors, an independent firm with advisory services offered through Parson X Advisory Services, Inc., PAS, a federally registered investment advisor. The information provided is for informational and educational purposes only and should not be considered as personalized investment advice. PAS does not guarantee the accuracy, completeness, or suitability of this information for your specific circumstances. Investment decisions should be based on an individual's goals, time horizon, and risk tolerance. Past performance is not indicative of future results, and all investments carry a degree of risk, including the potential loss of principal. Any case studies, testimonials, or endorsements shared in this podcast are illustrative of individual experiences and may not be representative of the experience of all clients. They do not guarantee future performance or success. You should not infer any level of assurance regarding future financial outcomes. Listeners should consult with a qualified financial, tax, or legal professional before making any investment decisions. Parson X Advisory Services, Inc. does not provide tax or legal advice. Be sure to consult with your tax and legal professionals regarding your specific circumstances. For a copy of our Form ADV Part 2A, which provides additional information about PAS, including our advisory fees and services, please visit powerhousefinancialadvisors.com.